By 2026, the market just wasn't human anymore. It was a machine. High-frequency trading firms and their AI algorithms were everywhere. They were faster, they were smarter, and they definitely didn't sleep. Every single time I placed a trade, it felt like an AI was on the other side. Running my entry, sniping my stop-loss, and exploiting every flicker of hesitation. My account was bleeding out, one surgically precise trade at a time. I was just completely outmatched, frustrated, and honestly I was ready to quit. I was ready. Look, before we dive in, you have to understand what trading felt like back then. The volatility was just insane. 1 minute, oil prices were screaming past $100 a barrel because of fresh tensions in the Middle East. The next, the entire semiconductor sector was ripping higher because of one AI company's earnings report. It felt like every story was a weapon, and the AIs were the ones pulling the strings, and they thrive on this chaos. Their algorithms are literally designed to trigger an emotional response in humans, to make you panic sell on a dip or FOMO buy at the absolute top. And I was falling for every single trap. I'd see a stock breaking out, I'd jump in late, and bam, get immediately stuffed as the price reversed. I'd set a mental stop loss, only to watch the price dip one tick below it, trigger a wave of selling, and then instantly rebound without me. The machines were farming human emotion, and my account was the crop. I wasted months trying to fight back with conventional weapons. I cluttered my charts with every indicator you can imagine, RSI, MACD, Bollinger Bands, thinking if I just had more data, I could win. But the AIs were processing infinitely more data, infinitely faster. It was like bringing a knife to a drone fight. I was always one step behind, reacting to moves the algorithms had already priced in minutes ago. It was just hopeless. You feel like you're playing a rigged game, and in a way, you are. Unless you change the rules. The turning point. My turning point came when I was at my absolute breaking point. I was one bad trade away from blowing my entire account, so I did something radical. I wiped my charts clean. No more indicators, no more noise. I was starting from scratch and questioning everything. I opened up my trading platform, not to place a trade, but to actually explore it. Every menu, every setting, every tool I had been ignoring for years, and that's when I found them. Hiding in plain sight were these features I'd always dismissed as too complex or just unimportant. These weren't magic indicators, they were tools built to do one thing: enforce discipline and remove the very emotional weaknesses the AIs were built to exploit. It hit me like a ton of bricks. The edge wasn't in predicting the market, the edge was in controlling myself. A retail trader's biggest weakness isn't a lack of speed, it's emotional decision-making. And these app secrets were the key to fixing it. Section 1. Secret number 1, Master Bracket and OCO Orders. Alright, secret number 1 is the most practical, and it immediately stops you from making the two most common emotional mistakes: holding on to losers for way too long and cutting your winners way too short. It's all about mastering advanced order types, specifically bracket and one cancels the other, or OCO orders. Most of us start out just using market orders to get in and out of a trade. That's a rookie mistake. It's like screaming to the market, "Hey, I'll pay whatever you want." You're making yourself completely vulnerable. An AI sees that market order and can exploit it in a microsecond. A bracket order, which you can find in platforms like Thinkorswim or Oanda, is your first line of defense. When you decide to enter a trade, you simultaneously set your stop loss and your take profit target. You define your exact risk and your exact reward before you're even in the trade. Say you decide to risk 1% to make a 2% gain. You set it, and the platform executes that plan for you no matter what. Why does this beat an AI? Because the AI is designed to make you doubt yourself. It'll push the price down just far enough to tempt you into moving your stop loss. It'll give you a little pop to convince you to take profits too early. But with a bracket order, your plan is locked in. Suddenly your emotions can't sabotage the trade. There's no hoping a loser will turn around. There's no fear that a winner will vanish. There's only your plan. The OCO order is the engine that makes this work, making sure that if your profit target gets hit, your stop loss is automatically canceled, and vice versa. You set it, and you forget it. This one feature forces you to trade with the cold, calculated discipline of a machine. Section 2, secret number 2, use AI journaling to fight AI. This next secret is all about fighting fire with fire. The AIs in the market are constantly learning, analyzing data to find patterns in our behavior that they can exploit. So, what if you used your own AI to find the patterns in your behavior first? This is where integrated journaling apps like TradeMetria or some of the new AI-powered psychology apps come in. Most traders either don't journal at all, or they do it in some messy spreadsheet that they never look at again. That's useless. Modern trading apps can automatically pull in all your trades from your broker, but the secret isn't just logging the trades, it's using the AI brain that sits on top of it. These apps can tag your trades with your emotional state. Before you enter a trade, you quickly log if you're feeling confident, anxious, or maybe a little bit of FOMO. Over time, the AI connects your mental state to your performance. It'll show you hard data, like you have a 70% loss rate on trades you entered with the FOMO tag, or your biggest losses consistently happen between 10 a.m. and 11 a.m. on Tuesdays. This is an absolute game changer. The market-making AIs know you're likely to revenge trade after a big loss, but with an AI journal, you'll literally get a push notification on your phone after a bad trade that says, "You just took a significant loss." Your data shows you tend to over-leverage on the next trade, maybe take a 15-minute break. It's like having a personal performance coach watching over your shoulder. You're using technology to find and plug your own psychological leaks before the market's algorithms can even find them. Section 3. Secret number 3. Deploy level 2. Data for offside setups. Alright, secret number 3 is where we get a little more offensive. AI algorithms can process level 2 order book data thousands of times a second. You can't beat that on speed, but you can use that same data to spot where the big players, including other algorithms, are trapped. Level 2 data shows you all the buy and sell orders waiting above and below the current price. Most retail traders ignore it because it just looks like a frantic waterfall of numbers. But the secret is to use it to spot what I call offsides positioning. Here's how it works. You look for a stock with high short interest that's crawling up toward a key resistance level. On the level 2 screen, you'll see massive sell walls, huge blocks of sell orders sitting right at that resistance. An AI sees this and expects the price to get rejected. But you're looking for a catalyst, strong market news, a sector-wide move that could give the price enough juice to push through that wall. Using custom alerts in a platform like Interactive Brokers, you can set a notification for when volume spikes as the price gets near that wall. If the price breaks through, all those shorts and sell-side algorithms are now trapped offsides. Their stop losses, which are buy orders, start to trigger. This creates a buying cascade, a classic short squeeze. The very AIs that were trying to defend that level are now forced to become buyers, fueling the explosive move they were betting against. You're not predicting the move, you're finding a point of maximum tension and just waiting for it to snap. You're using the AI's own positioning against it. Section 4. Secret number 4. The pre-trade breath reset. Timer. This next one is going to sound ridiculously simple, but trust me, its psychological impact is huge. It's about creating a pattern interrupt to kill the impulsivity that algorithms are designed to provoke. The secret is using a simple app timer paired with a breathing exercise before every single trade you take. Impulsive trades are an AI's favorite food source. They create these sharp, fast moves designed to trigger your fight-or-flight response, making you smash that buy button without thinking. You get a rush of adrenaline, and your rational brain gets completely bypassed. To fight this, you have to force a pause. It doesn't matter what app you use. It can be your phone's clock, or a meditation app like Calm or Headspace. Here's the rule you set for yourself. Before you are allowed to click the buy or sell button, you must start a 60-second timer. During that minute, you do a simple box breathing exercise. Inhale for 4 seconds, hold for 4, exhale for 4, hold for 4. This does 2 critical things. First, it stops the emotional hijack. That 1 minute is just long enough for the initial adrenaline spike to fade, and for the logical part of your brain to come back online. Second, it forces you to mentally justify your trade one last time. In that quiet minute, you have to ask yourself, is this really my setup? Where's my stop? What's my target? Am I just chasing? I guarantee you, an impulsive trade will rarely survive that 60 seconds of scrutiny. The AI created a signal for your lizard brain, but you filtered it through your human brain. That simple pause is a shield that most algorithms can't get through. Section 5. Secret number 5. Enforce a max daily loss at the broker level. Secret number 5 is your fail-safe. It's your ejection seat. This is the one tool that guarantees you survive to trade another day. The broker-enforced max daily loss limit. We all know we should have a daily loss limit, right? But for most of us, it's more of a friendly suggestion. After a few bad trades, we get emotional and start revenge trading, trying to win it all back with bigger, dumber, and riskier bets. This is the exact emotional spiral that AIs are masters at triggering. They know that a trader who just lost money is predictable, emotional, and desperate. A broker-enforced limit, a feature you can find on platforms like Lightspeed or Interactive Brokers, takes that choice away from you. You go into your account settings and set a hard dollar limit, say, no more than 2% of your account in one day. If your net losses hit that number, the platform automatically flattens your positions, and, more importantly, it locks you out from placing new trades until the next trading day. You can't override it. You can't sweet-talk yourself into just one more trade. The machine simply says no. The psychology here is huge. It separates you from your P&L. A bad day is no longer some deep personal failure. It's just a day where you hit a predefined risk limit. It forces you to take the loss, step away, and come back tomorrow with a clear head. It completely short-circuits the revenge trading loop that AIs feed on. This feature alone will save you from 90% of the mistakes that blow up accounts. Section 6. Secret number 6. Use price action scanners, not indicators. Secret number 6 requires a little shift in your philosophy. It's about throwing out all the indicator clutter that clouds your judgment and focusing only on what's real, price and volume. The secret is to use modern app scanners to find clean price action setups instead of chasing lagging indicators. Beginner traders love indicators because they seem to offer a simple buy here or sell here signal. But here's the dirty little secret about indicators. They're all just looking in the rearview mirror. They are lagging. By the time your MACD finally crosses over, the real move has probably already happened, and the AIs are getting ready to sell their shares to the latecomers, which is you. Professional traders and the smartest algorithms focus on naked price action. They look at chart structure, support and resistance, and candlestick patterns. The secret is that you don't have to find these manually anymore. Apps like TradingView have incredibly powerful scanners that let you scan the entire market in seconds for pure price action setups. For instance, you could literally build a scan that says, show me all the stocks that are above their 50-day moving average, have been consolidating for 3 weeks, and are now breaking out on 3x the normal volume. The scanner gives you a clean, pre-filtered list of high-potential setups. You're no longer distracted by a million different signals. Your only job is to execute on the best-looking patterns. This clarity gives you a massive edge. While other retail traders are getting chopped to pieces by conflicting indicator signals, you're focused on the raw DNA of the market. You're trading the cause, not the effect. And that brings us to the final secret. This is where we stop playing defense and start going on the offensive. We're going to use the newest generation of AI to build our battle plans. The secret is using AI-powered modeling to run what-if scenarios. Think about it. Most trading is reactive. News breaks, and we scramble to react. An AI can read and react to that headline in microseconds. We can't win that game. But what if you could prepare for major market-moving events before they ever happen? New fintech platforms are starting to integrate large language models to do just that. These tools let you model potential economic or geopolitical shocks. For example, back in early 2026 with the ongoing oil shock, I could literally type in a prompt like, model the probable impact on shipping stocks and the Indian rupee if the Strait of Hormuz is closed for 72 hours. The AI would instantly run simulations based on historical data, cross-asset correlations, and volatility models. It might come back with a probabilistic map showing that certain shipping stocks would likely spike 15–20%, while the currency would fall. Let me be clear, this isn't a crystal ball. It's not about predicting the future. It's about building a playbook. So when that real news alert flashes across the screen, I'm not panicking. I'm not reacting. I'm executing a plan I've already rehearsed. While the news-reading AIs are just starting to process the headline, I'm already positioned. This is the ultimate edge, using AI not for prediction, but for preparation. You go from being a reactive pawn in their game to a proactive strategist in yours. So there you have it. The 7 secrets that allowed me, a regular retail trader, to stand my ground and find my edge in a market completely dominated by AI. Let's run through them one more time. Automate your risk with bracket and OCO orders to take your emotions off the table. Use AI journaling to find and fix your own psychological flaws before the market does. Hunt for offside setups with level 2 data to use the AI's own aggression against it. Force a pause with a pre-trade breath reset to kill those impulsive decisions. Set a hard stop with broker-enforced max daily loss limits to guarantee you can't blow up your account. Scan for price action, not lagging indicators, to get clarity and focus. Run what-if scenarios with new AI tools to prepare like a strategist, not just react like a pawn. The battle against AI traders isn't about having a faster internet connection or some mythical perfect indicator. It's a psychological war. Our advantage as retail traders is that we can be nimble, we can be selective, we can operate outside of a rigid algorithmic box. These 7 secrets aren't loopholes, they're a system for strengthening your greatest asset, your human mind. You stop making the dumb, emotional mistakes the algorithms expect you to make, and you start using your creativity and foresight, the one thing they can never replicate. The machines may have taken over the market, but the game is far from over.